Welcome back to the Pro Ticker Show, your Saturday edition, covering major financial magazine headlines. We've got a whole stack of articles to unpack this week from Bloomberg, the Wall Street Journal, CNBC, and Reuters. Let's dive right in.
Yeah, it's interesting actually. There's this whole conversation going on about trade wars and their potential impact on the global economy.
Okay.
The Wall Street Journal had a piece on Christine Lagarde, the president of the European Central Bank.
Okay, so what's she saying?
Well, she's warning that these rising trade barriers could actually reignite inflation
Oh, wow.
and take a huge chunk out of global GDP, like 6%.
6%. That's a lot. That's a serious warning, isn't it? Especially with the U.S. elections coming up. The article even mentioned Donald Trump's proposed tariffs.
Exactly.
So it's like adding fuel to the fire, right?
Absolutely. And then you've got CNBC interviewing the German finance minister, and he was very clear about, if the U.S. starts a trade war with the EU, they're ready to retaliate.
Yeah.
It's a bit of a tit-for-tat situation.
Yeah, it's a high-stakes game they're playing. And it's not just a US-EU thing either. Bloomberg quoted the IMF's deputy managing director, and they're really concerned about the escalating trade tensions between the US and China. They're basically saying this could hurt everyone.
Right, and all of this against the backdrop of the U.S. election.
Exactly. And the US election always, stirs things up a little bit in the market. So, it's a lot for investors to digest.
Right. And speaking of investors, Barron's Big Money poll had some interesting insights there.
Yeah, I saw that they seem cautiously optimistic, but everyone seems to be worried about inflation. I mean, that makes sense with what Lagarde was saying, right?
For sure. But what I found interesting was a Bloomberg piece on Chinese stocks, and it seems like investors are more focused on China's stimulus measures than the U.S. election outcome.
Wow.
So it just shows how interconnected things are. I mean, what happens in China affects us here
Absolutely.
and vice versa.
But going back to that Barron's poll, even with, high valuations, most investors are still bullish on earnings, particularly in the energy sector.
It does seem a little counterintuitive, right? I mean, why be optimistic about energy when we're talking about potential slowdowns in trade wars?
Well, the poll suggests managers see potential for growth in the energy sector, and they're kind of banking on that long-term outlook. They're thinking long-term, even with some short-term volatility.
And, that long-term perspective is key. Now, speaking of a sector with a positive outlook, Bloomberg had a piece predicting that tech stocks are likely to outperform again this quarter.
Yeah, earnings growth seems to be the driving force there.
Yes, but what's really interesting is the margin expansion happening in tech. Companies are finding ways to be more profitable. And here's the thing, it's not just the big players.
Oh, interesting. So there might be opportunities in some lesser-known tech companies.
Okay.
Now, let's switch gears a little bit. Reuters had a pretty concerning article about Israel carrying out strikes on military sites in Iran.
Yeah, this is a situation that's been heating up recently. You'll remember that Iranian missile attack on Israel a while back.
Right, and they have a long history of conflict, these two.
Yeah.
So where does that leave us? Well, the article says Iran suffered some casualties, but there wasn't widespread damage. And importantly, key infrastructure, like oil and nuclear facilities, those were untouched.
Right, and that's a crucial detail. It seems like both sides are trying to avoid an all-out war, at least for now.
Yeah.
The article also mentioned that the U.S. was informed in advance by Israel, and they kind of urged restraint from both sides to prevent things from escalating further. So I wonder, how does all of this play into these global market trends?
Well, Bloomberg had this really interesting article about Saudi Arabia and how they're working really hard to attract foreign investment. They're trying to ensure regional stability despite these tensions, which, I mean, it makes sense.
Right, stability is generally good for business.
Exactly, especially if you're trying to attract investors. Okay, so turning to some specific companies now. Bloomberg had an article about Apple being downgraded by KeyBank Capital. Analysts are questioning the company's growth expectations.
It's quite a contrast to news about Trump Media.
Yeah.
Their stock has actually tripled since the expiration of a lockup period, according to another Bloomberg article.
It's amazing how some investors are drawn to those controversial stocks, right?
Yeah.
It's almost ironic, though, because Trump Media was still voted one of the most overvalued stocks in that Barron's Big Money poll we were talking about. So much for investor consensus.
Indeed. Now, here's a curveball. The Wall Street Journal had an article about the Consumer Financial Protection Bureau. They're issuing a warning to businesses about using AI and algorithms for employee surveillance.
Oh, wow, that is a curveball. What are they concerned about?
Well, they're arguing that these tools fall under existing consumer protection laws, like the Fair Credit Reporting Act. And this could potentially give employees the right to consent to access their information and even dispute any inaccuracies.
Wow, that's huge.
Yeah.
And that could have a ripple effect across all sorts of industries, not just the high-tech ones. It's something to watch for sure, both as employees and investors. But for now, let's turn to CNBC. They had an article about Stripe acquiring Bridge Network, a crypto startup, for, get this, $1.1 billion.
Yeah, that's a big win for venture capital, especially in this current market.
Yeah.
It definitely demonstrates a strong belief in Bridge's potential. There's a detail in the article that I thought was particularly striking. A venture capitalist actually flew to Montana to secure the initial investment in Bridge.
Wow. Talk about dedication. It really shows that there's, a lot of excitement around this company. And it's a reminder that those opportunities can arise in the most unexpected places.
Oh,
Speaking of unexpected success stories, Barron's had a fascinating article about Wolters Kluwer. That's the Dutch publishing company.
yeah. Their stock has seen incredible growth. We're talking 700% over the past decade. Remember when everyone was predicting that the internet would destroy the publishing industry?
Right. It's amazing how they've managed to adapt.
Yeah.
But what's their secret?
Well, they've focused on providing reliable and trusted content, especially in fields like law and medicine.
So in this age of AI and misinformation, they're doubling down on the value of human expertise and accuracy.
Precisely. And it's clearly a strategy that's paid off. That Barron's Big Money poll, they didn't just ask about valuations in favorite sectors. They also asked these financial experts to make some predictions.
Oh, right, like peering into the future.
Exactly. So, for instance, they asked about the price of oil a year from now. The average prediction was $76.23 per barrel.
Interesting. Oil has been all over the place lately. What are they considering when they make that prediction?
I imagine it's a whole bunch of things. Global demand, production levels, all those geopolitical risks we talked about in the Middle East, and of course, the potential for trade barriers.
It's amazing how all these things come together and affect the price of something we all need.
Right. And speaking of interconnectedness, remember we were talking about gold being a safe haven in times of uncertainty?
Yeah, especially with all this talk about inflation.
Well, these big money managers seem pretty bullish on gold, too. They predicted an average price of $2,719 per troy ounce over the next year.
Wow, that's a pretty significant jump from where it is now. Do they think it's going to keep outperforming the market?
Seems like it, and some managers were even more optimistic. One predicted gold could hit $5,000 an ounce if inflation fears persist.
$5,000 an ounce. That's a bold prediction.
It is. But these are pretty extraordinary times. Okay, so let's move on to something a little bit more digital. What did they have to say about Bitcoin?
Ugh. Bitcoin.
Always a wild card.
The manager's average prediction for Bitcoin a year from now was $60,558.
So they're expecting it to rebound a bit.
It appears that way, but predicting the price of Bitcoin, it's like reading tea leaves. It's influenced by so many different factors, regulations, adoption rates, heck, even Elon Musk's tweets can move the market. Speaking of Elon Musk, that CNBC article about his talks with Putin during the whole Twitter takeover mentioned that Starlink, SpaceX's satellite internet service, is still not available in Taiwan.
Yeah, I saw that, and a lot of people are raising eyebrows about that decision. I mean, Starlink played such a vital role in Ukraine during the war.
It did. And it does make you question some of his choices, especially when it comes to things like national security.
It's a really complicated situation, and it shows how technology and global politics are becoming more and more intertwined.
Absolutely. We definitely need to keep paying attention to these developments. Speaking of implications, let's circle back to that Wall Street Journal article about the Consumer Financial Protection Bureau and their warning about employee surveillance using AI.
That was a really interesting article. It seems like the CFPB is really trying to protect workers' rights in this digital age.
And it's not just about AI and algorithms. They're also looking at a whole range of tools that companies are using to track employee behavior, things like monitoring productivity and analyzing customer complaints.
Even assessing the likelihood of an employee joining a union.
Exactly. It's a lot to take in. And it can feel kind of overwhelming, especially for workers who might not even know they're being monitored. That's why the CFPB is really emphasizing transparency and consent. Workers need to know what information is being collected about them and how it's being used.
And they have the right to challenge anything that's inaccurate. It's about fairness and accountability.
Exactly. It's about recognizing that even in a digital age, workers have privacy rights.
Absolutely. And I think this is just the beginning. We're going to be seeing a lot more discussion about the balance between worker privacy and employers' interests.
No doubt. And I imagine it'll play out differently in various industries. Type of work, the company size, even the political climate will probably factor into how this unfolds. But enough about employee monitoring for now. Let's go back to that Bloomberg article about Trump media stock tripling in value.
That's pretty impressive, especially with all the controversy surrounding the company.
It does seem like some investors are willing to overlook ethical concerns when they think they see the potential for huge profits.
Well, that's the market for you, right? Doesn't always align with our values. But it does make you think about the sustainability of some of these investments.
It certainly does. It'll be interesting to see if this trend continues or if it's just a blip on the radar. Now, let's shift gears and talk about a company taking a drastically different approach. Wolters Kluwer.
Oh, yeah. The publishing company that's thriving in the digital age because they focus on providing reliable content.
The very same. That Barron's piece on them was fascinating. They've managed to take what many people saw as a threat, the internet, and turn it into an opportunity.
That's a powerful lesson for anyone in business, really. Instead of being afraid of change, you can look for ways to adapt and actually use it to your advantage.
Precisely. And they've done it by understanding that in a world overflowing with information, reliability and credibility become even more valuable.
Especially when the alternative might be relying on questionable sources like AI chatbots or those social media echo chambers.
Right. Okay, so let's shift our focus back to the global economy. Remember that Wall Street Journal piece about Christine Lagarde's warning about trade barriers?
Yeah, the one where she said they could reignite inflation and cause a big hit to global GDP. A pretty sobering assessment.
It was. And it's especially concerning given the current geopolitical climate.
Absolutely. With all this tension between major economies, the risk of these protectionist policies is a real concern.
It is.
And it's not just about tariffs either. Lagarde mentioned a whole bunch of barriers that can stifle trade, like different regulations, security concerns, even just plain hostility between countries.
Yeah, and the consequences of that kind of fragmentation can be severe. You know, higher prices, fewer choices for consumers, slower economic growth. It's a recipe for instability.
It really is a reminder that we're all connected. What happens in one part of the world can have these ripple effects across the globe.
Speaking of ripple effects, let's talk about a region that's facing its own set of challenges. That Reuters piece on Israeli strikes on Iran was pretty unsettling.
It definitely shows how fragile things are in the Middle East.
Yeah, and the article said that even though the strikes targeted military sites, they avoided key infrastructure like oil and nuclear facilities.
So it seems like, at least for now, Israel's trying to avoid a full-blown war. But there's still that potential for things to escalate, isn't there?
Absolutely. Any more conflict in that region could have a major impact on the global economy.
Exactly. Especially for those energy markets. It's a good reminder that geopolitical risk is something that investors really need to keep a close eye on. But let's move on to something a little more hopeful, something about innovation. Remember that Bloomberg piece about Apple's secret blood sugar app?
Yes, that was a fascinating look into Apple's foray into healthcare.
Yeah.
And, their research could have wider implications. It could influence how they handle all kinds of health data and how they develop new products.
I mean, their work on a non-invasive glucose monitor could be a real game changer.
Imagine being able to track your blood sugar without those finger pricks. That would make life easier for so many people.
Absolutely. It just shows how technology can be used to really improve lives. Okay, now let's turn our attention to the UK. Bloomberg had an article about their banking sector.
Oh, what's happening across the pond?
It seems UK banks are facing billions more in payouts because of a recent ruling on auto loans.
Wow, that's significant. What was the ruling about?
The article didn't go into the specifics, but it did suggest that it could have a pretty substantial impact on UK banks' profits.
It's another example of the challenges facing the financial sector. I mean, it's constantly changing.
You've got regulation, technology, economic uncertainty. It's a lot to navigate. But speaking of navigating a complex landscape, remember that Bloomberg piece about tech stocks possibly outperforming again this quarter?
The one highlighting margin expansion in tech. Yeah, it's definitely a trend worth watching.
And it's not just the usual suspects like Apple, Microsoft, Amazon. The article mentioned that margin expansion is happening across the board, even in the smaller, lesser-known companies.
Oh, interesting. So there could be some hidden gems out there.
There could be. Of course, as always, caution is advised. The tech sector can be volatile. But speaking of surprising successes, let's bring up Wolters Kluwer again. That Barron's article about their 700% stock growth over the past decade, it was incredible.
It's a real story of resilience and adaptation. Proof that slow and steady progress can really pay off.
They've shown that when you provide something people really value, you can weather any storm. And in their case, that's trusted information.
Speaking of trusted information, let's turn back to China's stimulus efforts. That Bloomberg piece featuring Vice Finance Minister Liao Min comes to mind.
Oh yeah, the one where he talked about boosting domestic demand and hitting their growth target.
Exactly. He said their stimulus package is going to be of quite large scale, although he didn't give us any concrete details. It's quite a balancing act they're trying to pull off. Stimulating growth, managing debt, addressing overcapacity, and boosting consumption all at the same time.
It is a delicate dance, no doubt, and the outcome is going to have a huge impact on the entire global economy.
Speaking of things with global impact, let's bring it back to the U.S. election. Barron's Big Money poll had some interesting findings about investor sentiment.
Yeah, they're cautiously optimistic about the market,
Hmm.
but there's still that worry about inflation, which, is understandable. It's been a constant concern. And realistically, it's going to remain a factor no matter who wins.
Absolutely. But, the election could have a significant impact on specific sectors and companies.
Like EDP Renovades and renewables, which we talked about earlier.
Yeah.
And of course, there's always the potential for market volatility right after the election.
Especially if the results are close.
Exactly. Investors need to be prepared for a potentially bumpy ride. Now, let's talk about a company that's had its own share of bumpy rides, Trump Media.
Oh, yeah. The one whose stock has tripled since the lockup period ended. It's been a wild ride, that's for sure.
It really shows how market sentiment doesn't always line up with ethics.
True. Ultimately, it's up to each individual investor to decide what they're comfortable with.
Okay, let's move on to a company that's been making news for its focus on innovation. Stripe. Remember the CNBC piece about their acquisition of Bridge Network?
The crypto startup that's trying to make it easier for businesses to use digital currencies?
That's the one. It's a big deal, especially with the recent downturn in the crypto market. It shows that the big players are still willing to invest in that space.
Absolutely, and the fact that Stripe paid $1.1 billion for them really shows their confidence in the company's potential.
It's a great reminder that the crypto world is still evolving and there are still opportunities for growth and innovation.
And for our final topic in this section, let's bring back a familiar friend, Wolters Kluwer.
Oh, the Dutch publishing powerhouse.
Yeah.
Their story is really a testament to the power of adapting, and it shows the enduring value of good, solid information.
They've proven that you can not only survive, but really thrive, even when things are disrupted. You just have to understand what your customers need and provide something that meets those needs.
And in today's world, where we're bombarded with information from every direction, the need for reliable, accurate, trustworthy sources is more important than ever.
Absolutely. And companies like Wolters Kluwer are playing a vital role in filling that gap. All right, so picking up where we left off, I'm really curious about that Bloomberg article on Saudi Arabia and their push to attract foreign investment.
Yeah, they're really trying to create a more stable region so it's more attractive to businesses. But like we said, there are so many things going on in that part of the world.
It's tough, isn't it? Trying to balance those relationships with their neighbors and avoid conflicts.
But at the same time, they want to protect their own interests and keep their influence. It'll be interesting to see how they manage all of that.
Yeah, it will. Okay, changing gears now, that Bloomberg piece about Boeing exploring a sale of their space division really caught my eye.
Seems like they're streamlining their operations and getting back to basics, building airplanes. It makes sense after all the ups and downs they've had recently.
Well, yeah, I mean, the 737 MX crashes and the pandemic's effect on air travel, those were big setbacks. This move to sell the space division could help them get back on solid financial ground and maybe regain some of that investor confidence.
It could also be that they see how competitive the space industry is becoming, with companies like SpaceX and Blue Origin.
That's a good point. The space race is definitely heating up. Boeing might be feeling the pressure. Okay, let's switch to something a bit more positive, those CNBC earnings reports. Centene Corp, the health insurer, had a really good quarter.
Yeah, their profits beat Wall Street's expectations. That was a nice surprise for investors.
What do you think contributed to that?
Well, the article didn't really get into specifics, but it seems like Centene's benefiting from that growing demand for healthcare services.
Makes sense with the aging population and healthcare costs going up. Companies like Centene are probably in a good spot for growth. So it seems like some sectors are doing well and others are having a tougher time. Bloomberg had a piece about the S&P 500 rally kind of losing steam as banks, and Bitcoin took a hit.
Yeah, financials were down after New York Community Bancorp tumbled. They had a weaker outlook, and Bitcoin slumped after a report that federal investigators were looking into Tether, that
Mm.
cryptocurrency firm. So yeah, it was kind of a mixed bag for the markets that day. Tech shares did well, but financials and crypto, not so much.
It shows you how different sectors react to news in their own way. It's like a seesaw, one goes up, the other goes down.
Speaking of innovation, that CNBC article about Workday incorporating generative AI into their platform really stood out to me.
Yeah, it's a great example of how AI can be used to streamline those processes, automate tasks, and get insights that would have been really hard to get before. I mean, it's pretty amazing to see how AI is changing how we work.
And it's only going to become more integrated, so we definitely have to consider the ethical implications too.
Absolutely. Speaking of ethical considerations, that CNBC article about investors questioning Elon Musk's political activism caught my eye. You know his support for Donald Trump and being a major Republican donor?
Yeah, and some investors are worried that his political views could alienate customers and hurt Tesla's brand image.
It's a tricky situation for any CEO, especially someone as outspoken as Elon Musk. Be interesting to see how it all plays out for Tesla.
Yeah. It shows that any decision a CEO makes, even if it seems unrelated to the business, can have an impact. Okay, let's get back to a success story. That Barron's article about Wolters Kluwer's CEO Nancy McKinstry was a great read.
It's amazing how they've done so well in the digital world. I mean, everyone thought the internet would be the end of them.
They really did. So what's their secret?
They decided to focus on providing that reliable and trusted content, especially in those specialized areas like law, medicine, and taxes.
They understood that in a world with so much information, quality and credibility are more valuable than ever. And they built a very successful business model around that.
Exactly. Speaking of insights, how about that Bloomberg article on U.S. consumer sentiment hitting a 6-month high?
Yeah, that was great news. It seems like households are feeling better about the economy and less worried about inflation.
That's good news for economic growth because consumer spending is a huge driver.
Yeah, if people feel confident, they're more likely to spend, and that helps the recovery. And speaking of benefiting from the recovery, Bloomberg had a piece about Capital One Financial. Their profits were better than Wall Street expected.
What was behind that?
Their credit card and auto lending businesses were doing really well. It looks like consumers are feeling more comfortable taking on some debt.
That's usually a good sign for the economy. When people are borrowing, it means they're optimistic about the future. So, good news for Capital One. They're in a good spot to benefit from the economic growth if it keeps going.
It really does seem like we're seeing some good signs, despite those global challenges we were talking about earlier. Okay, let's shift to the tech world for a minute. Bank of America is super bullish on NVIDIA. According to a Bloomberg article, they raised their price target for the company.
It sounds like they're betting on NVIDIA to do well with all that growing demand for artificial intelligence and high-performance computing.
Yeah, their chips are used in so many things, from gaming to those big data centers to self-driving cars. And as more industries are using AI, NVIDIA's expertise is becoming more valuable.
It seems like they're definitely one to watch. But it's not all sunshine and roses in tech. CNBC reported that Dexcom, the company that makes those continuous glucose monitors, saw their stock drop after their third quarter results weren't that great.
Yeah, their revenue growth wasn't as good as expected. The article suggested it might be because of more competition, maybe even from companies like Apple, who are now looking into blood sugar monitoring.
It's a perfect example of how innovation can create opportunities and challenges at the same time. And it shows that even the most successful companies can be disrupted.
Sometimes you're disrupting, and sometimes you're being disrupted. It's all constantly changing. Okay, let's talk about a different kind of evolution happening in Europe. Bloomberg had a piece about Chemnitz, Germany. It's been named the European Capital of Culture.
Chemnitz. Isn't that the city that used to be a symbol of East Germany's industrial past?
That's the one. It's really interesting to see how they're changing and becoming a cultural hub. They're embracing their history, the good and the bad, and creating this really unique identity.
It just goes to show that even in places that have been through hard times, there's always potential for renewal and transformation. Speaking of transformation, we have to talk about generative AI. It's all the buzz. CNBC had a piece about its impact on gaming app development and the ethics of using such a powerful technology.
Generative AI has the power to change so many industries.
It really does.
I mean, it's already creating those realistic game environments, building new apps, and even generating creative content like music and art. The possibilities seem endless.
They do, but like
Yeah.
with any powerful tool, we have to consider those ethical implications, make sure it's being used responsibly.
Yeah, it's a discussion we need to have, and it needs to include everyone from the people who create the technology to the policymakers to the general public. So let's move on to something that could change the financial sector in a big way. Central bank digital currencies, or CBDCs.
Oh yeah, Bloomberg had that article about China expanding their digital yuan pilot program.
China's definitely in the lead when it comes to CBDCs. They want to modernize their financial system, lower costs, and boost efficiency.
And it could also give them a strategic advantage in the global financial system. And other countries like the US are exploring their own CBDC options. It's a big development. It could change how we use money entirely.
It really could. Okay, let's wrap things up with Tapestry Inc. They've been on a bit of an acquisition spree. Bloomberg reported that a judge blocked their $8.5 billion acquisition of Capri Holdings.
That's a big blow to Tapestry's plans. They wanted to build a luxury fashion powerhouse. For now, their ambitions are on hold.
Yeah, the article didn't say why the judge blocked it, but it did mention that Tapestry shares went up while Capri's went down. So investors seem to think Tapestry is better off without the deal.
It'll be interesting to see what they do next. Will they go after other acquisitions or focus on growing from within? Time will tell.
Well, we've covered so much today, from the global economy and geopolitics to tech, crypto, and even fashion. It's been a lot to take in.
It has, but I think we've learned a lot along the way.
Me too. And I hope our listeners feel like they have a better grasp of all the complexities of finance and investing. And remember, even though we've covered so much today, the conversation doesn't have to stop here. The news keeps coming, and we should never stop learning.
Well said. There's always something new to discover.
Absolutely. So on that note, we'll see you all